you think about kind of what's going on in the world, and there's a lot of ways things could go, what is the thing that kind of occupies your mind the most?
Yeah, well, first of all, pleasure to be here.
Thank you.
You know, we sit at a hinge in history right now. I think the last 30 years have been driven by economics, and I think the next 30 will be driven by geopolitics. And, you know, with the ground war in Europe, with Israel, Hamas, Iran going on, and now China threatening in the South China Sea on the Second Thomas Shoal in the Philippines and Taiwan, our world is in a state of flux that I'm not sure we all really understand how important what's happening is, because we're at a financial conference and everything feels pretty good.
It does.
The financial architecture of the world writ large has not been this bad in a very long time, which is adding to the problems that are geopolitical.
Kyle, we want to get into some of your investment plays as of late, but having said that, for investors who are listening, when you give that kind of broad macro overview, what does that mean in terms of how people need to be looking at the investment environment more critically, if you will?
Yeah, when you look at, even since COVID, and you look at the money supply, we all know the inflation that we experienced here in the US. But you have a scenario where we also pushed that dollar inflation to the rest of the world.
Yeah.
And there were countries that were emerging that were already having trouble, that were already mismanaged, but we really just broke them. And so when I think about investing, the US is 4% of the world's population. We're a quarter of the world's GDP. We're 40% of the world's capital markets. Investors better be thinking stay home and invest in the innovation that you guys have been talking about all day in North America. And don't focus your capital outside of North America right now, because the rest of the world has got some real problems that we're on the front end of, not on the back end of.
Well, we've seen that echoed by a lot of folks, including money managers overseas, who of course are looking to us. I do want to talk about it in the capacity of some of the initiatives to onshore or nearshore more manufacturing.
Yeah.
That goes to the same issue. It's not just about what investors want, but it's also about what corporations and ultimately what consumers are looking for as well.
Yeah, and you have to have one more element to that thought. It's investors, consumers, and in corporations, but it's also national security.
Yeah.
Right? We let the frog boil for a long time. You know, we allowed 95% of the active pharmaceutical ingredients for all of our antibiotics to be made in Wuhan. It's actually hard to believe that that's true, but that's true. All of our blood pressure medicine, 750,000 people take it every single day. All of it's made in China. We have allowed things to happen without being thoughtful, and reshoring is being more thoughtful about our supply chain.
Yeah, and it's going to take a while because there are cost structures that have benefited us by having a lot of that stuff overseas. So bringing it back home requires a bit of rethink as to how we do that. Do you have confidence in the government administrators and the politicians who are trying to orchestrate this, that they are doing it the right way?
You know, I don't think they're doing it fast enough, but at least we're moving in the right direction. And as you know, in the usual economy of the world and how wars go, there's never a great time for a war, and there's never a great time to set an endpoint for when you're going to restructure that supply chain. It's just going to happen. And you asked me what I worry about. It's obvious to me that the belligerents of the Chinese Communist Party, working together with Russia, working together with Iran and North Korea, all the bad guys are working together. That's a real problem. So I think it happens sooner rather than later.
Is China still a threat to us?
China's the biggest threat in the world to us.
Financially, geopolitically?
Geopolitically. I mean, financially, it's like whatever we have invested over there, we're going to lose it.
Yeah.
I mean, that's fine. It's not the end of the world.
I'm going to go through some of your investment bets. You've been Hong Kong, short on the Hong Kong dollar. That continues to be a strategy for you.
Yeah, I mean, the reason currency pegs used to work is they had synchronicity in their economies. As the US went, so did Hong Kong in the past. Now they have a completely divergent economy, and we have dynamism here that they don't have there, and vice versa. And Hong Kong and China are having a real estate collapse, a banking crisis, an unemployment crisis, while we're doing pretty well over here. So those interest rate differentials and the need, that's a 40-year-old peg that's rigid in two dynamic economies. In the end, it will break.
You like the U.S., real estate, Texas, other places. You've been buying up land?
Yes. What we focus on is where the population migration is going. Yeah. So we love the U.S. writ large. Where the businesses are out moving their businesses. People can move to Aspen and other places like that, but you can't move a whole business there. So Florida, Tennessee, Texas, all of the states that you see positive migration, I think is a great place to put your capital.
15 seconds, data centers?
I mean, think about this. The new hyperscale data centers pull 200 to 600 megawatts each. They used to pull like 90 and less. So we're going to have to build a lot of new power plants fast. And I think that's coming.